Good afternoon, everyone. We welcome you all to the webinar on
No,
prevention
no.
of. Shall I start?
Yes, now you can start.
Good afternoon, everyone. We welcome you all to the webinar on Prevention of Money Laundering Act. Today is the Series 3 and it is organized by the Banking, Financial Services and Insurance Board of the Institute of Cost Accountants of India today. And we are privileged to have as our speaker CMA Dr. P. Sivarama Prasad Sir. He is the former Assistant General Manager, State Bank of India. And we also have with us CMA Chitran Chattopadhyay Sir, who is the Chairman of the BFSI Board of the Institute of Cost Accountants of India. And CMA Dibyendu Roy Sir is the Additional Director of the Institute of Cost Accountants of India. So just before we start, we are playing the Institute anthem and then we will start off.
असतो मा सद्गमया तमसो मा ज्योतिर्गमया मृत्युर्मामृतं गमया
मा सद्गमया तमसो मा ज्योतिर्गमया मृत्युर्मामृतं गमया
असतो मा सद्गमया तमसो मा ज्योतिर्गमया मृत्युर्मामृतं गमया ॐ शान्ति शान्ति शान्ति।
So now I would request our Chairman Sir, CMA Chitran Chattopadhyay Sir, for his address. Just before, I'm just sharing his brief profile. Sir is a fellow member of ICMAI, an associate member of Indian Institute of Banking and Finance, and he is holding qualification from CIPFA London as Chartered Public Finance Accountant. He has 38 years of experience of working in commercial banks in different capacities. He has brought out several publications on banking for ICMAI, which include 3 editions on risk-based internal audit of commercial banks, guidance note on concurrent audit of commercial banks, internal audit of treasury functions of commercial banks, 8 memoir on lending to MSME sector, including restructuring of MSME credit, and 8 memoir on infrastructure financing. At present, he is Central Council member of ICMEI and Chairman of Banking, Financial Services and Insurance Board and Chairman of Internal Auditing and Assurance Standards Board, ICMEI. He is also a member of SAFA, NPO and Cooperative Committee. So we heartily welcome our Chairman, sir. So now requesting our sir for his address. Sir, please.
Thank you, Indakshi, for your introductions about me. Although I don't require introductions amongst my all participants here because I am very much old enough to be with this BFSI board, and this is the 5th year BFSI board is working in with help of the whole BFSI department people. Those who are staffs, I congratulate them to continue these webinars in every week. They are holding many valuable webinars, and especially today, this is another unique opportunity that with in such a beautiful evening today to all the, and I Really, I'm thankful to all the distinguished members, guests, and all the respected council members. I'm extremely delighted at the appreciation and outstanding response received for the first two series of the webinars on Prevention of Money Laundering Act conducted on 23rd and 30th September 2023. And I'm profusely thankful to CMA Dr. P. Sivarama Prasad, resource person of Banking, Financial Services and Insurance Board, who is our think tank also and key resource persons of the banking activities of the department. Ladies and gentlemen, in our concluding part of this series, which should be our third in our series of PMLA covering the following aspects: amendments under PMLA rules, maintenance of records under PMLA, maintenance of records, this amendment rules 2023, definition of politically exposed persons, which we known as PP or PIP, non-profit organizations like NGOs, beneficial ownership under PMLA rules, other changes in the PMLA rules, and also the recent changes in PMLA regulations for professionals like CMAs in PMLA 2022. The BFSI board is continuously striving their best to serve all the stakeholders, and we are proud to state that from tomorrow, our 9th batch of the certificate course on concurrent audit of the bank would be, starting. And we are more delighted to state you that for the first time, an international bank named Prince PLC has nominated 7 senior officials to our certificate course. Friends, this is a course which has been conceived by our institute from this BFSI board. And this has been basically on the operational risk of the banks and many other things that will be discussed throughout these courses. And this is a unique course. I request all our members, students and others to join the course, which is for capacity building and knowledge enhancement. And I will be rather requesting those who are very much interested, you can enroll today itself to take the advantage of this course of 30 hours. And when you'll be joining this course, you'll find the beauty of this course, that how this course will be taking you to the saga of banking. I hope and trust that all the participants benefit from today's webinar, and I request you all to please provide your valuable feedback to the BFSI department, and please mail to bfsi@icma.in. Again, we are going to organize another webinar next week on the topic of net zero roadmap for banking organizations, and unique topics on the banking on 14th October 2023 in the same time, that is from 4 to 6 p.m. And one of the non-bankers, but he is a very much proficient personality, Sri Robi Teja Chitajalu, Assistant Executive Engineer, Transmission Corporation of Andhra Pradesh Limited, who will be the speaker for the webinar. And I request you all to enjoy that. But today's program, once you listen, I am sure the 3 series, what you have already, 2 series you have enjoyed. After these 3 series, if you have any question, our Dr. Sivarama Prasad is ready to reply to your any questions. And I'm sure that you will be keeping in touch with our BFSI department from time to time. And whatever program we'll be conducting, you will be also availing the opportunity to listen to those programs, because our main objective is that to disseminate the latest knowledge on the banking, financial service and insurance sector. And BFSI board will be very happy to receive your response. And any sort of, if you want to connect with us, we have got another organ of this BFSI board, that is BFSI Chronicle, which is published quarterly. And you can contribute if you feel you can contribute in the BFSI Chronicle, your thought process on this BFSI sector. We have many more plans to go ahead with this, but your participations and your encouragement will be our most, we demand it from you, and which is most would be coveted for one. So I request you to please join with us in our movement of dissemination of knowledge in the BFSI sector. With this, I thank you all to be here in this Saturday afternoon to listen on the very appropriate topics, that is PMLA Act, which is definitely a game changer and which is very much relevant for your professional life. Thank you.
Thank you, sir. So I'm now privileged to
Indra.
introduce. Yes, sir. So thank you, sir. So I'm now privileged to introduce the brief profile of Sivarama Prasad, our eminent speaker today. Sir, he is a qualified professional in cost accountancy, company secretary, finance, commerce, insurance and banking with experience of 36 years in banking and financial services with cross-cultural experience and good knowledge in insurance sector. He is a fellow member of ICSI, the Indian Institute of Banking and Finance, Insurance Institute of India and the Institute of Cost Accountants of India. He is the former AGM of SBI and presently he is the faculty and resource person of our BFSI board. So we welcome you, sir. So now over to you, sir, for your deliberations.
Thank you. Thank you.
Sir,
Thank you
please.
very much, madam.
Thank you, sir.
PPT is visible, madam. Madam,
Yeah.
PPT is visible
Yes,
and my
yes,
voice
yes.
is audible
Yes, yes.
and the PPT is moving.
Yeah, it's moving.
Okay. So good afternoon to all. First of all, thanks to BFSI board for giving me an opportunity to discuss about the 3 series, that is the Prevention of a Money Laundering Act. This is the 3rd and final series. And in this series, I will cover important aspects, so particularly the professional practice point of view. Professional practice point of view. And if you open the paper, either Economic Times or a Business Line or whatever the paper, whether it is a local paper or regional paper or national paper, everywhere ED, Enforcement Directorate, attached this property, they have they seized this much amount, like that. Number of particularly the news is more on ED activities. That's why the total cases booked by Enforcement Directorate for the last 3 years is around 15,000 cases. Under 12 is under FEMA and 3 under the other acts. That's why being a professional, that too we are in practice, we should not commit any mistake. We have always follow the code of conduct as defined by the initiative. Otherwise, we may be in trouble on account of various acts that are prevailing in the country. So today's topic is on only I will discuss about in depth about how it will affect our profession, like that. And before that, I will cover some more latest developments and still suspicious transactions. There is no end for suspicious transactions because every day innovative people are innovative the how to avoid, how to manage, how to grab that particular whatever the fraudulent amount, unauthorized amounts. They are find out the ways and means. That's why the list is lengthy. Whether within the country or the cross-border transaction. Money laundering, offshore international activity. Because of being a banker, that all transactions are routed through the banking and financial system, and we know how the people are routing the transaction, irregular transaction through the banking system. The bad money they are converting with the help of a financial system, converted into the good money, that is called money laundering. They are doing the laundering activities. Customers introduced by overseas branch. Be the banker. Whenever other country customers are introduced overseas branches, we should be cautious. Why? Because they may affiliate or the affiliate or other bank based on the countries of the production of a drug or a drug trafficking may be prevalent. That's why we are not believing the other countries. Other countries, particularly the South Africa countries, they are not following the KYC guidelines. They are not the members of the FATF. That's why whenever they are going to open an account, we should not. The Reserve Bank of India also given certain list. Whenever these citizens are going to open an account with the bank, please brought to our notice. Please brought to our notice. And some countries, they are blacklisted. Some, particularly some organizations, they have blacklisted. That blacklisted list is supplied to all the banks and be cautious. Don't open account in these organization names for these people like that. Use letter of credit and other methods of trade finance to move money between countries where such a trade is not consistent. But they are opening the letter of credit. Foreign guarantees are called a letter of credit. In the foreign guarantees, they are opening and the goods or services not transported from one country to another country, but money is transferring for illegal activities. So use the letter of credit and methods of trade finance to move money between countries where such trade is not consistent with the customer usual business. That's why all these things are. Be cautious. Banks are very cautious in these areas. Once we are find out these type of transactions, immediately we will inform to the FIUIND under STR report, suspicious transaction report. During large balances, not consistent with the known turnover of the customer business and the subsequent transfer to the account held overseas. And particularly, they accumulated the amount. Some of the customers, they accumulated the amount. But if you see the accumulated amount, it is not consistent with the business, what they are doing. Their business turnover is less, but the accumulation amount is more. And subsequently, this amount they are transferring to other countries. Thereby, it is also a laundering activity, money laundering activities. And immediately, if at all the system gives any report, we will verify and accordingly we will inform to the concerned authorities. Unexplained electronic transfers. Today, cross-border transactions are increased on account of a trade, on account of services or goods. Cross-border transactions are increased, that too through electronically. Particularly for country to country, the transactions are happening through the SWIFT, SWIFT, Society for Worldwide Interbank Financial Telecommunication. Not only that one, recently for cross-border transactions, UPI is also there. Unified payments interface system is also introduced to certain countries. And in that case, these people, particularly who are doing the wrong things, they will transfer the funds by using that network or that system and they are transferring the funds, illegal funds to the other countries. Unexplained electronic fund transfers. Why they have received that much amount? We don't know. If at all you are seeing that person, he is a below poverty line people, some people are meager income people, but lakhs of rupees received. Foreign currency drafts, negotiable instrument to be issued, etc., etc., etc. Frequent requests, travel escorts, or foreign currency, or other negotiable instruments to be issued. Some other people, they're paying INR and they want to take the foreign travelers cards. Not only that one, prepaid cards are also there. Not only that one, Vishwayatra card is also there. So these are prepaid and they are upload the amount and they are carrying that card and enjoying that amount in other countries. Frequent requests they request for travelers cards for foreign currency drafts or other negotiable instruments to be issued. If these transactions are captured by the system, definitely we will inform to FIU IND Financial Intelligence Unit, Government of India. Frequent using of a Vishwayatra card, prepaid foreign currency card or foreign currency drafts, but it is not a business transaction. If at all it is a business transaction or business purpose, no problem. But they are violating the FEMA guidelines. That's why in ED cases of last 3 years, out of the total 15,000 plus cases, 12,000 are FEMA cases, foreign exchange management violation cases, and 3,000 cases are other than FEMA cases. That's why whenever in your profession the clients are doing any foreign exchange transaction, be alert. Know what is the system, how he is getting the funds, how he is utilizing the funds, what are the FEMA guidelines, what is the regulations issued by the Reserve Bank of India in this regard. If you want to masterize, if you wish to masterize, particularly the FEMA guidelines, only the regulations are available in the rbi.org.in. Nearly 10 regulations are there. If you go through that one, then you will become an expert in FEMA. Once you are expert in FEMA, whatever the irregular transactions are that are doing by the clients, it is very easy to brought to the notice of the particular FIU IND. FEMA is not a rocket science. It is a simple science. Money laundering involving financial transactions, employees and agents. Some of the employees of the organization or some companies, they are appointing agents in other countries or within the country. They are also doing the money laundering activities without knowledge of the corporate. That also suspicious transaction. That is also to be find out and brought to the notice of FIU IND. Otherwise, we are also involved in that case. ED will investigate us also. Even today, bankers, if at all any suspicious transactions are there, I keep quiet and not informed to the FIU IND. I am also in that. I am also one of the party in that particular case. Changes in employees' characteristics. If they are doing in the organization any money laundering activities, lavish styles, particularly the lavish styles and avoiding takeover leave. So changes in the employee's characteristic, lavish expenditure today. If at all I am getting a salary of 1 lakh and I am spending more amount, particularly lavish, I am coming to the bank by the high-end model car or beyond by means of income. And if that is the case, some of the business is turnover is very less, but he is spending more amount, lavish expenditure, because some suspicious inflow of funds, particularly money laundering activities, definitely will be there. Avoiding taking in the organization also, some of the people they don't want to take the leave, means they are doing something wrong. Naturally, everybody within a year, some days they have to take the leave. If at all they are not taking the leave, some suspicion, we have to suspect that a particular employee. Why he is not? What he is doing with the help of system? So if at all he applied leave, then the next person may find out whatever the fraudulent or suspicious transactions that are doing by this person, and he will catch hold of him and he will inform to the management also. Change in employee or agent's performance. That is, the salesman selling products for cash has a remarkable and unexpected increase in the performance. Even money laundering activities are happening in the insurance sector also. Endowment policies are there. Once endowment policy, they invested the unauthorized amount in the endowment policy, and the bad money converted into good money, and after that he will take back that amount. The insurance companies are also using by the culprits. Changes in employee and agent's performance. The salesman selling the products for cash. Why cash? Today all are online. RTGS or NEFT or QR code or whatever the means, definitely the cash transactions are gradually decreasing. But in that salesperson, most of them are cash. Remarkable and unexpected increase in the performance. Normally, the sales is only per month, only 10x. But if at all he is doing 10 crores, then wrong things are happening in that particular performance. Either he may be the agent or the employee. In a dealing with agent, where the identity ultimate beneficiary counterpart is undisclosed, to whom you have sold, but agent will not reveal that information. Sorry, you want sales. I have shown the performance. I have achieved my target like that. Don't be go into details about each and every customer like that. But today, that is important, not the target. The KYC of the know your customer is very, very important. And undisclosure contrary to the normal procedure, business types and concern. Money laundering by secured and unsecured lending. Pure lending, first they will take the loan and they will pay the amount with the laundering amount, and bad money converted into good money. Then they want to enjoy. This is happening in the banking sector, financial sector also. Money laundering by secured and unsecured lending. Customers repay problem loans unexpectedly. One non-performing asset is there. For the last 2 years, he is not paying. Suddenly he is paying. Some doubt will arise because the business is not there. Business is already closed. How he got that huge amount to repay the problematic loan? Problematic loan means it is not paid, a non-performing asset. But unauthorized amount, some unauthorized amount he may earn and liquidated that particular loan account. Customers who have problem loans unexpectedly, then normally we will scrutiny there. What are the various source of fund? Have you sold your assets of the company? No. But who has given this much amount? And simply we will credit. If a doubt arises, we will brought to the notice of FIU-IND. Request to borrow against assets held by the institution of third parties. Today, one of the biggest problem in the financial sector is whenever the banks are giving loan, the borrower is not giving, the borrower may not have his own immobile property. He will give the security of third persons or other institutions. So we have to suspect. Why he is not offering his security? Okay, if at all he is not having that security, he is not eligible. Why other person is offering his security? What is the reason for that? Request to borrow against assets by institutions or third party, where the origin of assets is not known or the assets are inconsistent with customer standing. One middle class person is there. Overnight or within a 1 month, he become a millionaire. Not through lottery and other things. Then doubt will arise. Up to last month, he is going by scooter. Now he is using the high-end model car. Something suspicious transactions. Laundering activities are handled. Request the customer to provide arrange finance where source of customer financial contribution unclear, particularly when the property is involved. Even gold loans, whenever the banks are giving gold loans, some of the people they are bringing gold 2 kgs or 3 kgs ornaments. 2 kgs or 3 kgs ornament means some of the banks they are giving readily the amount. Why? Because target approach. 2 kgs of gold means, but the customer appears to be a middle class man. How he got 2 kgs of gold and he's taking the loan? So here, lot of suspicious transactions are happening. This is to be investigated. The customer to provide arrange finance where the source of customer's financial contribution unclear, particularly when the property is involved. Amendments. Even though the sky is the limit for suspicious transactions. People are innovating. Oh, okay, banks are catch hold of, if at all we are using this method, they will catch hold of by the enforcement directorate. They are daily new methods, new process they are adopting to convert the bad money into the good money, converting bad money to good with the help of the financial system or banks. That's why the PMLA Act, particularly Prevention of Money Laundering Act, in the coming days, number of changes will happen based on the feedback. If you see the enforcement directorate, each and every case, this much the assets are seized. This is a proper person. This is a person. Some professionals are also there involved in this process. That's why, being a professional, we have to follow the governance, functioning in an efficient manner by following the ethics of the practice. The code of conduct is very, very important. If at all we bypass the code, then we may be the one of the party in that particular case. That should not happen. Amendment to PMA rules. Recently, a lot of amendments were made. Some of the amendments are applicable to the professions, either CA or CMA or CS. All are called, this is a professional called financial professionals. You are called financial profession. Accounts under Foreign Contribution Regulation Act 2010, that is FCRA Act. That is modified because cross-border the funds are receiving by the country and they are using for wrong activities. So in terms of Foreign Contribution Regulation Act 2010, certain categories of individuals and organizations required to obtain prior permission of the central government. Secretary, Minister of Home Affairs, Government of India, New Delhi, to receive foreign contribution or to accept the hospitality as and such receipt and action reporting to the government. I am a religious organization. I am an individual. I am distributing some particularly the weaker sections of the society, some the social service I'm doing. I'm getting a huge amount of from particularly from other countries. Those who are donating amount, but prima facie, it is the objective of that formation of that society or a trust or a non-governmental organ. But if you go in detail, then it is not for that purpose. Today, most of the NGOs, most of the trusts, most of the societies, they are doing these activities, illegal activities. So, in terms of foreign contribution regulation 2000, certain categories of individuals and organizations are required to obtain prior permission from the central government, Secretary, Minister for Home Affairs. Today, whatever inward remittance is there, whatever outward remittance is there, how much funds are received through the trust or societies, dashboard is available in the Minister of Home Affairs. Which organization receiving from which country, how many dollars or whatever their currency is there. Today it is very easy. Cross-border transactions are very easy to catch hold of those particular persons. All are routed through the financial system only. That too, Society for Worldwide Interbank Telecommunications. They only. Central government has notified Foreign Contribution Regulation Amendment Rules 2022, why it shows a number that is issued on 1st July 2022 for further amend the foreign contribution to strengthen, to stop the irregular activities which are transferred from one country to another country. Today, particularly during elections also, some other countries are giving some funds to the other countries. So this type of irregular transactions are happening. Then the stability of the government and a stable government or good governance of the government will not happen. As per Amendment Rule 6 FCRR 2011, any person receiving foreign contribution 10 lakhs in a financial year from relatives as defined in section 2 subsection 1 clause R of the FCRA 2010 has to intimate to the central government within 3 months of the receipt of foreign currency. If at all we have not informed, then it is an unauthorized amount and it attracts a penalty also. And sometimes it may create imprisonment also. Once the enforcement directorate catch hold of that matter. Today, enforcement director means not 100 crores or 200 crores. 1 crore PMLA Act clearly says 1 crore and above. 1 crore and above. Whatever the irregular transactions are, money is there. The ED can book a case against that particular person. So, as per Amendment Rule 6, FCRR 2011, any person receiving foreign contribution more than 10 lakhs in any financial year from relatives as defined in section 2 subsection 1 clause R of the FCR has to intimate to the central government within 3 months. Otherwise, it is not a correct. It is not correct. They may penalize. It will attract some penalties and punishments also. Earlier, such a limit is only 1 lakh and the intimations to the central government within 30 days. Within 30 days. Maintenance of records. being a professional and being a receiver of the foreign currency or whatever it is, records of maintenance are also clearly defined. And the PMLA Maintenance of Records Amendment Rules 2023, they have clearly defined. Even your client records are also to be preserved by you for 10 years. And if at all the enforcement director requested you to provide that particular information means, so no sir, that the client is not with me means no. Whatever earlier you have audited or verified or is your client for various services, that records are to be produced as and when enforcement directory instruct you to produce. If at all you have not produced, then the consequences are to be faced. On 7th March 2023, the Minister of Finance, the Department of Revenue, Government of India introduced the amendment rules of 2023. What are those rules? Government of India has taken effective steps to amend the money laundering comprehension, more disclosures for banks as well as financial institutions. It is not only for the professionals, but also banks are also, we have to preserve that records. If at all we have not preserved the records, then the bankers are also punishable under the PMLA Act. We are called regulated entities. So the regulated entities has to produce whenever the enforcement directory requests that some information about that particular person. Government of India define politically exposed person. PEP. Earlier, PEP means you are thinking. We are thinking about MLA, MP, or whatever the political people are there. No, now it is widened. Under the Prevention of Money Laundering Act, as per the recommendations of the FATF, Financial Action Task Force. No, whatever your definition is there, that is wrong. Please include all these people in PEP, politically exposed persons. It is now a wider definition. PEP means not only the political party people, it is a wider definition. Now, what is that wider definition? Definition of a politically exposed person. What is a wider definition? The wider definition is new clause implemented in the finance ministry define PEP individuals who have been interested. Now the PEP definition is a wider one. Individuals who have been entrusted with prominent public functions. They have defined what is meant by prominent public function. Once he is identified and entrusted with the job of a prominent public function, then he will be covered under PEP transaction. PEP transaction is a highly risk from the banker's point of view. Whenever we are opening the PEP transactions, we have to open that account and verify the whatever the due diligence is with the help of a microscope. And we have to, with the lenses only, we have to see, not simply to open the account. My budget may be there, my deposits budget may be there, but while opening the PEP accounts, once or twice, you have to verify the documents, and the utmost care is in due diligence. With the prominent public functions of the foreign currency, including heads of the states. You know who is the head of the state, chief ministers, or governments, head of the government, chief secretaries, or senior politicians, or senior government or judicial or military officer or senior executive or state-owned corporations, and important political party officials. Now the PEP is a wider term. even though the terminology is a politically exposed person, politically exposed person means prominent public functions. If at all you have entrusted to any individual, all our people are called politically exposed persons. The main aim to amend the PEP definition under PML Act is to show conformity in related 2002 circular. In 2002, the PEP is a smaller, not a wider one. It is a narrow definition. But the Reserve Bank of India, they have broadly defined the PEP. AML, the KYC AML, Know Your Customer Anti-Money Laundering Act of AML guidelines issued by the regulator to the banks. The PEP definition is different, and PMLA PEP different. The PMLA 2002 definition is narrow. Thereby, some of the cases, some of the parties, they are escaped in this process. That's why they have wider on par with the banking terminology. In the banking, the PEP is whatever I told earlier. That is the definition. That FATF, they told, no, you have to change your PEP definition. Because we are the member of the FATF. Whatever the guidelines are there, we have to implement. The main aim to amend the PEP definition under PML Act to show the conformity related to 2002 circular that was published by Reserve Bank of India, that is anti-money laundering and KYC norms that are applicable for banks and financial has actually defined PEP with the FATF norms. AML, KYC, AML, we have defined correctly. Reserve Bank of India defined correctly. But in the PMLA Act, it is not properly defined. That's why most of the people are escaped from the PML point of view. Even though we have to book the case by the enforcement directory, they are not covered under the definition. That's why they have redefined, and the broad term of PEP, the PEP defined is a wider one and on par with AML and KYC as defined by the Reserve Bank of India. And this definition is confirmed by Financial Action Task Force of the worldwide norms. PEP definition mentioned amended PML rules is now applicable everywhere. Now we can, the number of people are small things, and the wider term, if you see that a particular section wider term, almost all people are covered. Whoever is doing the wrong things, and whatever the bad money is there, and they are going to convert into good money, then enforcement directory will catch hold of the persons with the help of a new definition. Non-governmental organization. Today, to open a NGO is a difficult one. Earlier, we are providing service to the society, we are doing this social service, we are doing this health camps, that camps, this camps. No. All are bluffing the government. Today, if NGOs are opened, any NGOs are opened, scrutiny is there under FCRA or a lot of lenses. While opening the account by the banks are also, RBI has given guidelines. Non-governmental organization. To convert the bad money into good, this is one channel some of the people they are choosing. Some of the people they are choosing this one. Really, it is not a non-profit organization. The non-profit organization defined a non-profit organization has been explained particularly, which now include any entity or organization constituted for religious or charitable purpose of the section 2 subsection 15 of Income Tax Act, or registered as a trust or society under a Societies Registration Act or similar state legislation, or a company registered under section 8 of the Companies Act. Close scrutiny is there. And with the help of lenses, we have to verify their transactions. And some of the people they are talking, they are telling administrator, even for administrative expenditure, also some stipulation is there for NGOs, non-profit organizations. The clients or non-profit organization financial shall register the client's information on Darpan portal Niti Aayog. Earlier, this system is not there. Now they have to register Darpan portal Niti Aayog. If they are registered, then close scrutiny is there. Today, earlier, some of the professions, they told, why can't you open NGOs and divert this amount, that amount, like that, they will give some suggestions. Now that suggestions, not, it is irrelevant suggestions and not good suggestions. And the Darpan portal Niti Aayog, close scrutiny. Whatever the transactions all are, close scrutiny is there. If at all they are receiving from other countries, the FCA RA also, they told about how they are spending, how much administration expenditure is there. And for that administration expenses also, caps are there, caps not exceeding this amount. Otherwise, some of the people, 90% administration expenses. No. In that case, why have started the NGO? After ending the business relationship between the client and themselves, closing the account, the reporting entity must maintain the records for 5 years. Business relationship. This is an earlier instruction. Now it is 10 years. According to the recent amendment, banks and financial institutions will now not only require maintaining records of the financial transactions that PEP and also NGOs. Now they required share the information to enforcement directory as and when they require. If at all earlier, the banks are not sharing that information to enforcement directory, but in the amendment 2023, no. Once the ED is asked, whatever the documents they require, we have to produce to the enforcement directory. I need not ask the customer or client. I need not ask because it is stipulated or there in the act itself. Second one is in the PMLA rules, one more amendment made, that is called beneficial ownership. Beneficial ownership. What is a beneficial ownership? The recent amendment of PMLA rules also incorporate the definition for beneficial owners under the anti-money laundering law. Beneficial ownership. Some of the people, they are simply opening company accounts or partnership accounts or sole trader. And later on, if they are, if the ED catch hold of that, I'm not the beneficiary, sir. I'm only the facilitator or the administrator to do the functioning of the company. The beneficiary is different. No. At the time of opening the account by the bank today, who is the beneficiary of this account. If at all in individual cases, it is a beneficiary. But in case of a business organization, who is the ultimate beneficiary? Who is the key managerial persons? And who is the all particulars, details are also required now. Then only we have to open the account, and not simply as earlier we will take while opening the account we will take the certificate of incorporation or memorandum of association or articles of association or board resolution that is suffice. Today that is not the case. It has been made mandatory for banks to gather information about the clients that are required. Full details. Otherwise, people are skipping. No, I'm not the beneficiary. I'm only facilitator. I'm the administrator. I'm only running the company on behalf of them like that. Whenever the punishments are attracted, then these people are talking like that. To avoid or to avoid that one, the beneficiary owner. Who is the beneficiary owner for this business? Amendment now consider individual or group holding 10% ownership in reporting entity as a beneficiary. 10%. Earlier it is 25%. They reduce. If at all I am having some share capital in that particular company, 10% or above, I am the beneficial one. Earlier this is 25%. Other changes in PMLA rules. What are the other changes that are happened? Government amended due diligence documents. While opening the account, a lot of due diligence is required today. And all documents cross-checking is also there. Earlier, that is not the case. Even if at all you are in practice, while clients are there, clients due diligence is also very much required. Okay, definitely you have to provide service for the fees, but at the same time, know your client. Like banks, know your customer. Even banks also, whenever they are recruiting the people, KYE, know your employee. KYE, know your employee. Know your client. Who is the client? Whether it's a good client or bad client, or if it a bad client means, then automatically the problem will arise later on. Government has amended due diligence document requirement for the PML rules. Earlier, banks used to collect only PAN and incorporation from the business part of the KYC process. For partnership deed and individual partners, whoever is there, and who is a managing partner. As per the partnership deed, we will take we will see the who is a managing partner and accordingly open that one. Today, that is not the case. Lot of due diligence requirements to be satisfied. Whether it is a sole trader or the partnership or the NGO or the society or the trustee, whatever the various business types of entities are there, whether it is a profitable or non-profitable, lot of stringent guidelines are issued by the regulator, that is a financial regulator, that is Reserve Bank of India. Earlier banks to collect only PAN. Even once I have given PAN, then automatically system verifies the UTI server whether the PAN number correct or not, and immediately it displayed the name and other particulars of the PAN holder and whether it matches to the customer name who is going to open the account. All cross checkings are there. If at all it is not there, then we will decline to open the account. Now there are additional documents from the officers who are power to make decisions for the business. Earlier, we don't want all whether they are doing their own business. I am a banker. My role is only to attract deposit and give the loan. No, that is not correct. Beyond that, who is opening the account? If at all it is a business there, who is having the power to make the decisions in that business, that also I have to include in the documents. Later on, if at all their decisions are wrong decisions or any suspicious transactions are there, then ED first he will catch hold of that particular person. Amendment ensures that banks are better understanding the people responsible for managing the company. Who is the people responsible? Otherwise, everybody is disowned their responsibility. No, no, sir, I am not, sir. He is the, sir, he is not the that person. No, 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 not correct. At the time of opening all these requirements, that's why the due diligence is stringent norms are issued by the regulator on account of revised guidelines of PMLA amendments 2023. Then only I have to open the account. Today, to open the account is not a simple task. Banks have more comprehensive view of the business and ensure the right individuals are authorized to act on this in this behalf, on its behalf. Comprehensive business every year. Some of the professional, oh no, you open multiple accounts in multiple banks and give the documents and some of the documents, if at all you are not religious, banks they don't, they ask also like, no, 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 today it is not possible. Whatever the illegal transactions are there, that is to be arrested. If at all it is not arrested, or if at all we are not controlled, or it is not mitigated, that type of transactions, then the bank officials or bank employees will also involve in that particular process under PMLA revised guidelines. So the banks are more comprehensive view of the business and ensure that the right individuals are authorized to act on behalf, and information required now also includes name of the person, holding, senior management persons, partners or beneficiaries, all the details, their Aadhaar card, their PAN card, all are required. Earlier, only the managing partner, managing director, and the board resolution is there. We use it to open. Today, no. To book the case, particularly those who are involved in that particular process of that management, who are taking the decisions, who are the key managerial persons. Additional clients are required to submit details of a registered address of the principal place of business to the banks. Now all people addresses are required. All people KYC is required. Once all are fulfilled, then only we will open the account in the core banking system. If at all partial document, no, total documents. It is not our guidelines. It is the guidelines of the regulator. The regulator is instructed by the government of India only. Cryptocurrency. Today, some of the people, they are investing their hard-earned money. Instead of share market, they are investing in a cryptocurrency. Or if at all unauthorized amount or illegal amount or bad money is there, they are routed through cryptocurrency. Now how the amount is moving, all amounts are moving through wire transactions only, that is electronically funds transfers. It is very easy to catch hold of those people. If at all I am giving 100 rupees to you, it is very difficult to catch because the note is a bearer note. Whoever is carrying that note, he is the owner of that particular. But in electronic funds transfer, the wire transactions all are properly recorded. The cryptocurrency also in KYC, the PML, amendments of 2023, they have mentioned about the cryptocurrency also. New rules of PMLA have brought cryptocurrency under the scope of money laundering laws. Earlier, there some of the people, no, boss, you can buy whatever the black money, whatever the different colors of money is there, you can be invested in crypto. No, that is not possible. New rules for PMLA has brought the cryptocurrency under the scope of the money laundering laws. Crypto exchanges, whatever the exchanges are there, that generally deal with the virtual digits. Crypto is a virtual digital asset. In the earlier cast also, I told about virtual digital assets, cryptocurrency, mandatory require performing of KYC of their clients. Even G20 also, one of the agenda is the money laundering activities are to be curbed, and all countries are to be focused on the crypto also. So that's why the crypto exchanges generally deal with the virtual digits, mandatorily require performing the KYC. Some of the professionals, they are suggesting that is not the code of conduct to the clients. They are suggesting you go this route, then nobody will catch hold of it. No. Today, all transactions, it is very easy to identify. Okay, it is not 100%, at least 80%. 20% always that buffer is there. Recent changes, PMLA regulation for professionals. CA or CMS or CS, all are covered under this new regulations, amendment regulations. Okay, earlier is also there, but now it is a stringent norms are there. The provision of Money Laundering Act, the main objective is a critical legislation in India. It is a critical legislation. Once the money laundering activities are there in the country, then it is uncontrollable to the administrators, the rulers. That's why the combat the financial crime and money laundering is a need of our in almost all countries across the globe. To combat the financial crimes and money laundering is a need of our. There is no exception. Otherwise, the country economic growth will not happen. The bridge between haves and have-nots will increase. The poor people and rich people, haves and have-nots, the bridge widened, not narrowed, and illegal activities, uncontrollable law and order, are all problems are arising. That's why focusing on PMLA Act. Not only in the country, as for FATF, who are the members of the FATF, all countries they have to do that one. It is not an exception to India. Financial professionals, you are the financial profession. CA is a financial profession, CS is a financial profession, CMA is also called finance professionals. Have the responsibility. Being a profession, you have to follow the code of conduct as defined or designed by the various professional initiatives. About the latest changes of PMLA regulations, you have to update the knowledge about the latest updations, how it will affect my practice, how will affect my clients. If at all later on I don't know about that act means it is not excuse. It is not excuse. Ensure that are in compliance. Whatever the act clearly defined with regard to the financial professions, all are in toto. That is 100% you have to implement. Thereafter, I don't know, sir, about, I know about Companies Act, I know about the Partnership Act, I know ICAA Act, that act is this act. No, no. You should, being a finance professional, you should be updated the knowledge of the PMLA regulation from time to time, whatever the government is defined. Because you are the finance profession. You are providing service to the various clients. Government has made risk charges. PMLA regulation that are particularly relevant to the financial professions. All are come under the scanner of the PMLA. Because day in and day out, you are verifying the financial statements of the clients. Whether that audit, this audit, or GST return, or income tax return, or the profit and loss account, or trading account, or balance sheets, or whatever the audits are there, various types of audit, you know 100% of what type of transactions that a client is doing. You're the first person in that particular process. You know better than the ED. The government has made recent changes to the PML regulation that are particularly relevant to the financial professions. One of the most significant is required CMS to report a suspicious transfer. How many of you are aware? Okay, if at all banks, if at all any suspicious transactions are there, as an employee of the bank, I am brought to the notice of FIU IND. I am not compromise. No, my budget, my deposits will decrease, or my advances will decrease, and the bank will suffer. I am not thinking about them. This is a law that to combat the irregular transactions or illegal transactions in the country. One of the most significant change in the required of CMS to report suspicious transaction to the FIU IND within 15 days of identifying them. We should not delay. Some of the normally every profession, they will think if at all I inform, then my professional business will reduce. Okay, that constraint is always be there. Even in the banks also, if at all whatever suspicious transactions are there, if I informed, then automatically my image will increase. This is a sound bank. This is irregular practices. My goodwill will also increase. If at all authorized transactions, regular, good transactions are there, the people will know to me. Bad people should not be encouraged. If at all we are encouraged, we will involve in that particular process. Failure to comply later on, if the client is doing some wrong things, and those things are comes under the purview of a PMLA 2002, in that process, we are also one of the party in that particular process. Failure to comply with this requirement could result penalty 10 lakhs. So we should be alert. We should be cautious. Okay, one side competition is there in the profession. Second side opportunities may be bleak. Okay, agreed. But we should not do the irregular business or irregular services, authorized services, authenticated services. Whatever the acts that are stipulated in the country, we should obey the act. So failure to comply with this requirement could result a penalty up to 10 lakhs. Extinction of record keeping from 5 years to 10 years. Whatever the client records are there with you, you have to preserve for 10 years. Earlier it is 5. Because there is no limitation period for frauds. From the date of detection only the period of limitation will start. Suppose the fraud was happened in 2000. Today it was located. From today onwards the limitation period will stop. No, it is a 2000 fraud. The whatever the limitation period is said, that is over means that is not correct. As per Indian Limitation Act. So the exchange of record keeping, you have to keep the records, whether it is an electronic record or manual records, not 5 years. It should be preserved for 10 years in a proper manner. All the records, wherever we are providing services to various clients, whether it is a GST or income tax or audit or cost or whatever it is there. Whatever the services that are going to provide by you as a CMA, that records are to be preserved for 10 years. Finance professions. You are a finance profession. Whether CMA or CA or CS, finance professions are now required to maintain client's identity. No KYC. Know your client. In the bank, we are calling as a know your customer. But he is your client. So, authorized as per various statutory act. Whatever the authorized profession is there, that we have to do, not unauthorized profession. So, client identity is very, very important. Whenever I am opening an account in the bank, simply I am not opening, even though I told one case also last week, before last week. One customer came in the bank premises and he wants to deposit 50 crores and he don't want to give any proof of the Aadhaar card or PAN card or address proof or whatever the bank requirements are there. In case of company, memorandum and articles of association, certificate of incorporation or the board resolution or partnership, the partnership deed or whatever that societies bylaws and all this, whatever the different entities, different KYC are there. The customer told, no, I don't want to give all these things. I will deposit 50 crores as and when I will. I told, Namaskar. We don't want that 50 crores deposit. If at all that deposit I have accepted, I am also part of your illegal transaction. So financial professionals are now required to maintain records, client's identity and transaction for a period after the completion of the transactions for every client. 10 years record keeping is very much required. Accordingly, you have to provide the infrastructure, whether digitized. In most of the cases, digitalization is very, very important. Otherwise, it is accumulated and attracted dust and other things. Significant increase in the previous requirement of 5 years and is aimed to improve the transparency and accountability. Transparency and accountability in the financial transactions. Once I am unauthorizedly authorized that particular transaction and not brought to the notice of the particular FIU IND and not paid that 10 lakhs payment, within 15 days I brought to the notice, I have not informed, then I am accountable for that particular transaction as a financial profession. As a financial profession, I am accountable. I should not escape from that particular activity. Government of India introduced new rules for KYC compliance. the threshold of the PAN account number verification has been lowered 2.5 lakhs. Earlier it is 5.5 lakhs. If at all your customer is there, even 2.5, any transaction, any the business transaction, he is going to give 2.5 lakhs more than that transactions, whatever the you are certifying or verifying or auditing or whatever it is there, 5 lakhs. Which means financial professional now need to verify one of their clients transaction above 2.5 lakh. Whatever the professional fees you are crediting to your income account, and all clients, particularly the clients KYC is must. Know your client. The client will differ from individual to corporate or society. If at a societies you are handling, that KYC is different. Trustees you are handling, KYC is different. Partnerships you are handling, KYC is different. Companies you are handling, KYC is different. And non-governmental organizations are there, KYC is different. If at all any client is receiving from foreign currency, inward remittance is there, particularly the religious organization, the KYC is different. Individual KYC is different. All KYC is not common. Only PAN card is not sufficient. KYC means for that particular segment, what are the KYC? For that, being a professional, you please go through the KYC guidelines of the Reserve Bank of India. Whatever the KYC guidance for all these, they have defined for the banks, and the same may be adopted by you also. In case you are not having good knowledge about what documents I have to verify my clients before entering an agreement between me and the client. The Reserve Bank of India KYC, the master circular is available. In the master circular, all they have mentioned. When the bank is opening an account, we are following a certain KYC document. It differ from entity to entity, individual or entities. Entities are n number of entities are there. You take as a base. This will help improving the accuracy of KYC details and prevent money laundering and other financial crimes. So you may not stop the financial crimes of the client. Without your knowledge, he may do so many crimes, particularly financial crimes. So from your side, whatever the rules are there, regulations are there from time to time that is implemented in the country, you have to follow. There is no exception for that. To comply with the recent changes, PML regulation, financial provision, several steps. Because here, why in the PMLA amendment 2023, they are giving more focus on finance professional means all are rooted through the financial professionals only. By way of various certifications or auditing or the ever authentication required for various transactions. Today, why the banks, the Reserve Bank of India issued KYC and AML guidelines? Because all transactions are routed through the financial system only. That's why before accepting a customer, I have to follow the regulator guidelines. That too PML Act guideline, the Act guidelines also. Like that, you are as good as a regulated entities. You have to follow. There is no exception. Firstly, they need to ensure that there was a robust system in place for identifying and reporting suspicious transactions. Within 15 days, if at all you know, you have to inform. Later on, if enforcement director catch hold of that particular person, we may be the one of the party in that particular process. To avoid or to avert that one, we should be more cautious. So firstly, they need to ensure that they have robust system in place for identifying and reporting the suspicious transactions. And this may be upgrading their existing system. Whatever the systems we are following now, you go through the PMLA Act and accordingly you have to upgrade. Suppose digitalization of records for 10 years. Your server capacity is low and scanners may not be available. Upgrade the server capacity and purchase the scanners and scan the document, preserve the folders in a proper and take the backup in future. If at all any enforcement directorate they ask that particular record, then you are in a position to give and retrieve the record instantly and throw on their face. This may involve upgrading their existing systems and process or implementing new ones to ensure that can meet the new reporting requirements. You have to follow the new reporting requirements. Otherwise, penalties, imprisonment, non-adherence of the law, and sometimes it is a very awkward condition. Why should we invite all these negative things? So we should follow the whatever the guidelines are there. Further, I told about within 15 days reporting. How to report for that? FIUIND. They have issued one brochure, one booklet. That booklet is a Financial Intelligence Unit, Minister of Finance, Government of India, particularly reporting format introduction and online or offline, whatever the modes are there. For that, you have to go through this one. Otherwise, within 15 days, if at all you are not informed, then automatically 10 lakhs penalty will be imposed. Why should I pay 10 lakhs? Why not implement the Government of India guidelines? For that, confidentiality clause is there. If you go through that particular document, this document is a property of the Financial Intelligence India and the project FinNet 2.0. All the ideas, information contained within the document is intellectual property of FIUIND. These documents are not for general distribution and are meant only solely for the person or persons to whom the specially issued copying, authorizing, distributing these documents in any form or means, including electronic or mechanical photocopying, is illegal. Like that, they have document and control. They have given us a document. You have to inform. There is no exception. Once I have not informed, then I have to face the music of enforcement director. Secondly, financial professionals need to ensure that maintaining an accurate and complete record. Sir, no, I have not obtained, sir, but certified, sir, I have not obtained this one, sir. Still, because the client is not a producer, sir, but on account of last date, I have signed and certified, sir. No excuse, no exception. Even as a banker, if I tell, sir, that a client, not a producer, sir, he produced only the Aadhaar card, sir, PAN card is not a producer. He told after 1 month, in the meantime, I forgotten, sir, means, no, no, Mr. Prasad, you are also punishable. No exception. Maintain accurate and complete record of the client's identity and transaction for a period of 10 years. Sir, my server capacity is not there, sir. Server virus was happened and all the data is erased, sir. And I wish to digitalize that transaction. But physical transactions are why that's captured the books, sir. The books are lost, sir. Don't tell stories. The enforcement directive will tell, don't stories. I don't want to listen the stories. It is not a rocket science. It is a simple science. Either digitalization or preservation of records, and the pest control is also to be introduced. Otherwise, preservation of 10 years record, some maintenance is also required. Even banks also. Every month, the pest control people will come and whatever the vouchers and all these things, they will spray the pest control, and let thereby the white ants and other problems will not arise. The documents will be preserved for 10 years. This may involve upgrade the record keeping systems and process to ensure the capable of meeting no requirements. All the client proper year-wise segregate retrieval of the document whenever I require 2010 record should be retrieved easily. I should not spend more time on that. And document wise segregate. That's why it is called data warehousing. And whenever you are retrieving, it is called a data mining. Because some of the participants may have less number of clients, that too much technology is not required for them. But I am taking overall view. This involves upgrading the record keeping systems process to ensure that they are capable of meeting the new requirements. Thirdly, financial professions, either CA or CMA or CS, whoever is a financial profession, need to ensure that they are complying the new rules for KYC compliance. Sir, KYC compliance means not only PAN card, sir. For societies different, for clubs different, for industries different, for partnership different, for non-governmental organization different, for individuals different. That's why if you want to know the KYC compliance for each and every entity, go through the Reserve Bank of India Master Circular on KYC. That is to be adopted by the bank. Same can be adopted by you to avoid or to avert the risk in the process of that prevention of money laundering rules. Reviewing the existing claims. Sir, the 2023 guidelines recently came. It doesn't mean that old persons I should not review. You have to review the old persons and obtain the records. Even old clients also, you obtain the record. That's why even banks, every 3 years, or if at all any audit, risk focus and internal audit is there. If they mentioned, I have to obtain the fresh KYC guidance. Some of the people they are asking, sir, why the banks is asking KYC guidelines every 3 years? Your photograph will change after 3 years. And your address, some address may be changed. If at all I am transferred from one place to another address will change. Even in Aadhaar card also, address will be changed. So that's why this is a guidelines of the bank, not bank. It is a regulator guidelines. It is a regulator guidelines. Reviewing their existing KYC process and procedure to ensure that they are capable of meeting a new threshold for PAN verification. Sir, simply PAN, even for all KYC documents, the bank officials have to be authorized. I verified the originals and certified the Xerox copies. You have to verify. And accordingly, you have to authorize that particular PAN card also. Reviewing their existing KYC process and procedures to ensure that they are capable of meeting a new threshold PAN verification. Today, because 3 months back, I visited to one of the Xerox printer. One person came. He has given Aadhaar card. Boss, you remove that photo to the photo that Microsoft Photoshop like that some software is there and include this photograph. Immediately he did that and he has taken a 200 rupees for the same, like PAN card also. Remove that photograph and include that. And later on he prepared that card and laminated and given. That PAN card is a bogus PAN card and Aadhaar card is also a bogus Aadhaar card. Take the original, verify the original and Xerox and certify the same. The new threshold PAN card verification. That's why every 3 years bankers are also asking updation of your KYC. By ensuring compliance with the new regulations, financial profession can help to improve the transparency and accountability in the financial transaction and contribute to the fight against the financial crime and money laundering. You have to contribute, you have to support to the country to fight against the financial crime, to fight against the money laundering activities. You are also one of the stakeholders to combat the irregular transaction, to combat the black money or to combat the bad money of the country. You are the stakeholder. By ensuring the compliance, new regulation, financial profession can help improve the transparency and accountability in the financial transactions and contribute to fight against the financial crime and money laundering. That's why financial professions are included in the PMLA amendment and they have given more attention, more focus and they are accountable. All these things they have mentioned. That's why it is a need of our further professions to implement the PMLA. I don't know about the act. I don't know about the rules. I don't know about the KY, know your customer. I am not preserving the records. I am not verifying properly. All the client is not submitting the adequate. All are no excuse. No excuse. Once the case is filed, the case is filed against your client, definitely they will ask the evidences or proofs from the service providers, particularly the financial service providers. That's why I requested the BFSI board give a message, correct message, proper message for pay attention. Otherwise, our professionals should not be involved in the various process like this PMLA process. We should not involve. That's why I requested the BFSI board in this regard. That's why they have given 3 series to enlighten you about the PMLA 1, 2, 3. Suspicious circumstances relating to the client behavior. Normally, You are verifying the total documents, whatever the areas are there, services, whether it is audit or certification, whatever it is there. And you have to be more for cautious approach. Purchase of companies who have no obvious commercial purpose. They have purchased the company, but they are not doing any business. And crores of rupees transactions are happening. It is as good as a shell companies. If that is the case, we have to brought to the notice of FIU. Sales invoice totaling exceeding the value of the goods. If a total sales are more when compared to the actual production, and then once they are doing that money laundering activity also, that's why the revenue they want to show more when compared to the actual production. So that's why we have to inform this suspicious transaction to the FIU. Client makes unusual large cash payments in relation to business activity. Why cash payments? Once across even coconut vendor also, sir, you scan that QR code and pay the amount, Google Pay or Phone Pay or whatever the pay is there. Clients make unusual large cash payments in relation to business activity, which is normally be paid in cash or bank drafts or checks or RTGS or NEFT, etc. Only cash. Clients are transferring large sums of money to and fro from overseas location with an instruction for payment in cash. This type of transactions. So he is receiving the money and he is paying the cash to the same. So this type of transactions to be brought to the notice. Otherwise, if at all we are doing audit work or any certification work to any client, we should be cautious in these areas. Client who have numerous bank accounts. What is the necessity for numerous bank account? Today, anywhere banking is there. Earlier, some of the clients, they told, even customers are told, sir, that the bank is far away, sir, for remitting the cash. Today, that is not the case. A bank in your home, internet banking. For corporate also, corporate internet banking is there. If they want to deposit ATM, any ATM, they can deposit. Cash deposit machines are also there. They need not. No, sir. That Union Bank is nearer, sir. State Bank of India is far away, sir. That's why I have opened one more account in Union Bank of India. And in the production department, my manufacturing department is located elsewhere, sir. There, Indian Bank is there, sir. That's why I have opened. No. Because from one account to another account, the netting of they are doing lot of irregular transactions. That's why clients who have numerous bank accounts and pay amounts in cash in all those accounts, which if at all total amount large over also. Paying bank large third party checks. Why third party checks? Endorsed in favor of the customers. You have to issue whenever he is supplying the goods to you, you have to issue your check. But you are getting one check from others and you are endorsing the check to that particular supplier, which is highly irregular. First, you have to credit your account and you have to issue your company check to him. Paying a bank large third-party checks endorsed in favor of the customers. Potential suspicious secrecy might involve. What are that one? Excess unnecessary third-party transactions. He is neither supplier nor the customer. Unnecessary third party. What is the need for third-party transactions? Sales invoice total exceeding the value of the goods, using other accounts rather than paying for things directly. They are using other clients' accounts or other the director's account like that. Unwillingness to disclose the source of funds, how the funds are received by the company. They don't disclose. Unwillingness to disclose the identity of ultimate beneficiary of owners, that also question mark. And suspicious circumstances in group of companies. I have seen one company. They are having subsidiaries, nearly 12 something. These funds are transferred to this one to that one to this one. It is very difficult to find out. Today that is possible. Why? Because the technology support is there. In manual transactions, it may not be possible, but in technology, it is possible. Subsidiaries which have no apparent purpose. Why they have opened subsidiary? If you see the transactions if you see the no activity, but transactions are good amount of transactions. Companies continuously make substantial losses. If the company is incurring losses, they have to pay from their pocket, but they are not paying, but they are coming by high-end cars, big bungalows. But if you see the company, sir, for the last 5 years losses. Why you are contributing your hard-earned money for the company, and the company is incurring losses because ultimately they are not going to pay the financial institution funds, or they are not going to pay the suppliers who are supplying the stocks, and they will file that case. The financial institution file with the case with IBC, that is with NCLT like that. Complex group structures without cost, and uneconomic group structures for tax purpose. This type of suspicious transactions today, it is very easy to find out whatever the irregular transactions are there. Technology is there, knowledge increase, enforcement director in number of decided cases. They are having a good experience how to catch hold of the culprits who are combating the particular the money laundering transactions. All these things are there. Frequent changes in shareholders and directors, that is also there. And use the bank accounts with several banks without reason. Reason they will laugh and no sir, that our managing director interested in that one and we want to give deposit to that. Some reason which is not a genuine reason they will tell. Unexplained transfer of significant sums to several bank accounts, that bank to this bank to that bank to this bank. Lot of transactions. But none of the above factors won't necessarily mean that a customer or a person involved in the money transaction. However, it may be the combination of the same of these factors could raise suspicions. So I have given only a example. It doesn't mean they may use in a different mode, a different process, different new thoughts, new ideas, but being a profession, we know better than them, and we are having much intelligent than the client. That's why the client is we are offering services to them. We have to follow the governance, that following the ethics and functioning in an efficient manner by following the code of conduct. What does or does not give a rise of a suspicion will depends upon the particular circumstances. So that's why we should be alert. We should not involve in that particular process. And always think about the maximizing the client base. Okay, that is required also, undoubtedly required, but we should be cautious. We should not yield the bad practices. We should follow and we should understand the whatever the acts that are prevailing or implemented in the country and which are directly or indirectly related to my profession, that we have to update the knowledge. GSTN, now under the PMLA, enables data sharing with the ED Enforcement Directory and the FIUI and the Financial Intelligence Unit also. So that's why you are called financial professionals. You are the person verifying the records. You are the person requiring verifying the records or statements or audit, all these things. You are the correct or right person to disseminate the bad practices of any business organization to the appropriate authority. But at the same time, if you go through number of ED cases, day and day out, it is increasing. That's why within 3 years, on an average, yearly 5,000 cases are booked. In the coming days, it may be increased further also. Some of the cases, ED Enforcement Director has carried out such operations under the provision of PMLA 2002 on 20